What is going on, and welcome on in this fine Friday afternoon, December 1st. We are looking at BTC right now to start things off. The market's been actually pretty strong. Got a lot to talk about, at least in today's stream, because there's been a lot of interesting looking moves and charts, which we're going to cover here the next hour or so. So, taking a peek, let's jump over to SPY and see what that looks like. SPY right now is up about 0.5%. Yeah, 0.51 on the day. It is a new high of, I guess, this past couple of weeks. Did it tag? I think it did. We did today barely make a new high compared to July. So a new high of the year just hit on SPY, I guess, today, but barely. Jumping to QQQ, not so much, although we had made that high a couple of days ago. And then if you look at the Dow has been absolutely on fire. Look at these past 2 days in the Dow. Absolutely massive ripper of green candles on the Dow, which is pretty impressive. And then today, the Russell IWM just blasted off, went from essentially, not bottom of the range, but from consolidation to boom, next volume node in one shot, 2.5% push on the Russell, which is pretty impressive. So what's going on, everyone? Hope everyone's having a great Friday, having a great week. But yeah, I mean, it's pretty good at, movement, at least to say the least. Now, you look across the board, though, it's not like everything is ripping, because if you jump over to large caps, let's take a look at some of these charts. Here's Apple. Now, this chart looks actually pretty interesting. It's kind of a consolidation. Looks like it maybe is setting up for making its next leg, maybe in the future. Adobe, let's just go through my list. Adobe, it's been strong, pulled back past couple days, it's up today. AMD is technically still red today, but it's coming back from the highs. Amazon, it's not like everything is gone. It's not like everything is making a new high. It depends upon what you're looking at. Amazon's up there, kind of in this consolidation, choppy zone. Let's see, Caterpillar making some nice moves. Enphase has made some pretty big moves off of its lows, which were down the low 70s, mid-low 70s. It's now back at 105, looking to fill its gap down from mid to late October before the gap down on earnings. So slowly but surely coming back there. Google's still down about 0.5% today. Meta's down 0.82 right now. So some stuff still down pretty good, and Netflix is actually pretty nasty. Well, not pretty nasty, but relatively speaking, it's, down over 1.5%. Pretty good red candle there, despite the market being pretty strong. So it's like kind of a mixed, I don't want to say a mixed bag, but you got some variety out there. You go to risk on, though. Above me now is the my risk on watch list. I mean, this is really, really good. Mostly greens across the board. Snowflake, Roku are two reds on my list. And those are kind of like, honestly, larger cap companies, I believe, compared to the ones, most of what's on here. But yeah, ARK, ARK's making a new high of the week, pushing up 4.5% today alone. I mean, that's a pretty impressive move on ARK. You've got Affirm popping 9%. Affirm has hit kind of this nice little breakout over this 27 area and made a massive move of $10 in just a week, which is pretty incredible. Coinbase continues to blast off to new highs here, new highs of the year. And yeah, it's just things are making moves is what we got right now. Crazy week for sure. XBI, let me pull up XBI. Let me get my water here really quick. Give me 1 second, I get my water because I am pretty thirsty. XBI, okay. Not at the highs of yesterday, believe it or not, but the next area that I'd be watching is around 79 to 80. Really, I guess you can call it. Yeah, that's the next really big volume node on XBI. That's this area right here. 79 or so on it, which is like $2 off from where it currently is. Give me 1 sec. We back. When you fill it up and then you leave it at the fridge. That's exactly what I did. Filled it up about, I don't know, whenever I filled it up and then left it at the fridge. Okay, so yeah, that's the XBI chart. That's the next spot I'd be watching. I have exposure to it through Labu, but I sold covered calls for the 15th of the month. So we'll see. There's a split coming up, reverse split coming up. I think it can maybe get up to 455, which really it's already at 409. It's not that far. It's a pretty big move already on that, but doing its thing. What's going on, Flippa? Russell. Yeah. Yeah, I mean, the thing with the Russell, it's I personally am just going to leave it. I'm not touching that thing. It's just it's interesting to see what it's doing. Pretty big volume already, and still got 40 minutes to go. It is at a spot that would be a rejection area. I wouldn't be surprised. Here's my thing: is like I wouldn't be surprised if it does pull back. The reality though is, if it pulls back, like you're talking about, high probability somewhere in here versus the potential for a continued squeeze, which could be, who knows. The risk reward to me just doesn't make any sense. Doesn't make a lot of sense unless you get a good rejection today and then you're kind of playing it for a short term. But then you got to hold over the weekend, which again is also risky. So it's like, I preferably like to just play with this trend, And if I was going to play it, the only opportunity would have been maybe the break of this 181.75 today, which I missed anyway, so it doesn't even matter. But yeah, pretty big moves there on the Russ. What's going on, John? Yeah, it's a day and a half, I'll tell you that. Magnificent 7. Going to chill out. Yeah, maybe that's probably what's that's kind of what's happening now. It seems like, so what I would say is like, you're kind of in consolidations for some of these guys. I know I personally have been in meta for a swing trade. It hasn't really done anything. It's just kind of sitting. Well, from where I entered, it's like back to the same price, and that was like 2 weeks ago. So it really hasn't made a big move at all. Like Apple has been this consolidation. It's not surprising. But what you're seeing though is that, while stuff consolidates and does its thing, like let's say Apple, for example, the past 2 weeks or week and a half, whatever. You're getting good moves elsewhere, which is kind of playing this game of rotation. So sector rotation is occurring, and you're seeing, the Dow was really strong in the past 2 days, where now the Russell's pretty strong. And then the NASDAQ isn't really as strong, but the NASDAQ was really strong the weeks prior. So you're getting this rotation, which is a good sign. It's not like everything's getting nailed. And at the same time, you also have, reasons to look at those sectors and go, oh, wow, or look at small caps and the risk on and seeing some catch up is, the 10-year. So the 10-year continues to go down. It made a new low relative to the past couple of weeks of pulling back at 4.22. So, this continues to just drop off, and that's obviously good for risk on stocks that have been beaten down, that are recovering off of where they were, off of some of their lows. And that's kind of the deal. So, I mean, like, it's been a pretty good correlation between this coming down and then like ARK going up nicely, and then seeing a lot of those stocks, and the Russell and whatnot follow through as well. So we'll see. But the dollar also, oh yeah, I want to pull up gold because check this out. So here's the thing. I was in a silver trade this week, which I sold. Well, I think I recapped it in the last trade recap, but I essentially got in here, was in it for a bit, and then eventually it hit my targets as it made this push up here to 25.40, which is like right here. It's currently above that level barely, but silver, I was looking at the charts. Like, here's the daily chart, pretty big extended move. Like, I don't think it's worth touching this now. But what's more interesting to me, let me clear this chart up, was gold's chart. Well, I guess it's a combination of both. So here's silver, right? Here's silver's weekly chart. Let's adjust this. What I kind of see is maybe this is trying to eventually, maybe do something where it's going to break this and then go for a push up towards these highs, maybe 30-ish. And dare I say go for more than that? Maybe. It has a decent look with some higher lows. So we'll see. We'll be watching that closely. I guess you can kind of draw this in and make it a wedge if you want and say, okay, well, we're kind of at the top here. Maybe it breaks out and goes. So that's silver. It's, again, a little overextended right now on the shorter term time frame. But when you brought it out, it's not as crazy. Here's gold's weekly chart. So gold is tagging pretty much the all-time high level on gold. I mean, it's right up there, but it's a big week. So it's a big weekly break to the upside. So is this like, oh, buy that? No, I mean, not really, because it's like, okay, you missed the big move. Now, maybe there's a bigger move, but you got to have a bigger time horizon. That's how I would view it. So when you jump to the monthly chart, which I know it's like, okay, he's going to the monthly chart. What the fuck is this? But like, actually though, if you look at this move, right? So gold had this massive push in 2011. It pushed up here to these highs. We broke that in 2020. And then since kind of play this consolidation game, right? However, now we're testing the highs of this after a nice higher low right here. And you can even make the argument that you've got some sort of inverse head and shoulders. You can make the argument, I guess, but I don't really care. All I see is that this is going to be the strongest. Well, I guess December is just begun, right? So this was either way, we still closed in the month of November up here at 2035, which is the strongest close we have seen in terms of the highest close on the monthly candle we've seen on gold, like ever. So like literally ever. And then now we're following that up so far the first day of December looking pretty strong. So when I broaden this chart out, do you look at this chart and say, this is big picture. It's not like, this is going to happen next week. Like gold could literally just shit around for the next 6 weeks and this chart would still be intact. Like it would still look fine. If it obviously plummets like $200, $300, different story. But that's a massive move. But like big picture, right? When you zoom out and say, hey, I've been thinking about this from even an investing perspective too, like to think about the big time frames, like go to the monthly charts and see how these monthly charts line up. And does that make sense, from a momentum perspective? This chart looks interesting. Like if gold breaks a new all-time high and potentially holds that all-time high, so watch it in the coming weeks. It's coming days and weeks. It's not like, it's an urgent situation, which is why I like zooming out a lot on these things. So if it does that, does this make a move maybe to 2,500? Does it maybe make a move up into that 25 to 3,000 area? Like, is that unrealistic? Time horizon, I don't know. We're talking in the coming like years, months to years, right? But is that a potential place that you might want to park something? From this perspective, it looks like maybe it could be, right? If this holds up. So I don't know. This doesn't seem in that insane in terms of range, right? So watch that one. And then when I think about that, I'm like, okay, well, that's where gold looks. If you go to the monthly charts on silver, right? If gold did something like that, what's to say that silver can't go 30 and then this high is at 40 or 50. So what's to say silver can't push between 30 and 50, which is a massive move. That's almost 100% if you go to 50 in the coming, again, like months to years. It's big time horizons. So we'll see. I mean, that's what I'm kind of looking at. The momentum holds up. Looks interesting there. I have so I have a silver position on SLV. I sold a covered call and I rolled it to December 15th expiration at the 24 strike. I may have to roll it again just because I like the looks of these charts, to be honest, and I still want to have that exposure. I don't really feel that I don't feel that I don't want to have that exposure. I do want to have that exposure to silver still. So in the meantime, that's pushing up. The highs of the year are around 24 or just shy of 24. So it would need to make a new high of the year for me to be at risk of getting taken out. And again, it's probably overextended anyway. So maybe there's a pullback in store here. So maybe just those expire worthless anyway. But I would like to roll that. I'd like to stay in ideally. Although at the same time, it's getting up there. So we'll see. But here's the Robinhood portfolio, which by the way, this thing is just crushing right now. Now this is because it's a combination of things. Like you're positioned, or I'm positioned in pretty much everything that's working right now, which is not how the world always works, as we know pretty well. But it's doing great. Year to date, this thing is up 76. The past year, it's up 74. I mean, doing nice on this bad boy. But what do we have? A lot of stuff in here is going to expire worthless today. So we got some covered calls we have a covered call on ARK at the 50 strike. That's going to go worthless. You got a BITO 21 strike. That's going to go worthless. The thing that's kind of helped me with BITO is that BITO is held up, which is the Bitcoin exposure ETF. It's held up really, really well. But the problem is that the Bitcoin hasn't like really just kind of sent it and gone for it. If Bitcoin sends it and goes for a big move, then this thing could go a couple of dollars. Like it could skip a couple of dollars, just like it did back in here. When the thing went from like 14 to 17 in a very short period of time. So if Bitcoin really goes for it, this thing could be going into the 20s. Either way, I sold a covered call and that's going to expire worthless. And so I'll sell another one for mid-December. I'll sell that on Monday or Tuesday or something like that into next week. Depends upon how what we're looking like. But I've been talking about this before. There's a pretty decent chance that, well, I don't want to say decent chance, but there's a good chance that in the near future, we're going to be trimming out of a lot of things and then just kind of holding a core position in, what we want to be in, and then letting the market do whatever it wants to do. So, we're kind of achieving more than what the diversification and like the offshoots of the portfolio, little arms, the little fingers of the portfolio were meant to do, because we've got a core S&P dividend income ETF essentially position that's cash flowing monthly on JEPI, which again, I would like to just buy SPY or really probably just buy IWM, but IWM, and I could do it. In theory, I could do it with margin. So I might, and maybe I will do that and I will just kind of get rid of everything else and just get into this and then just sell covered calls on this and have my, small cap exposure, and that's it. They haven't performed as well as the S&P and what they haven't outperformed the S&P as of late, which is good, I would say. So I'd prefer, if you're going to pick a spot to be now, if you had to buy in, probably be in small caps anyway. But we'll see what happens. So yeah, ARK, that's going to expire worthless. Jets, 18 strike, that's going to expire worthless. Jets, let's just take a peek at Jets. Not getting close. It should be, it's at 17.25, so very nice move. But again, I'm looking for like 18 plus. So next week, again, I'll probably look to sell some covered calls in the time frame of the 15th and see what happens there. And then I got some 15 covered calls that'll expire in 2 weeks. So not really much to do on that front. But not a lot, but part of the reason why we're doing well is because you have this TMF position. So TOT is done very well. And I've got it, I did take the time in that beatdown to, slowly add in. I bought TOTW, which those dividends got reinvested back into more shares of it. So I in this period, I definitely did get some more. So it hurt me. Go back to October, it hurt me, but now we're reaping the rewards of buying that dip. And who knows how far it goes? I don't really care, to be honest, how far it goes. But the farther up, the farther of a move we make. If we get to $100 on TOT, there's a good chance that I'll be trimming some TMF, which is a 3x ETF, and letting it do its thing. And then that's kind of the same thing. It's just buying into the extensions down and then selling back in, or selling and trimming out of it as we kind of bounce back, and then holding back to the core of the S&P or in maybe a small cap ETF. But again, it would basically be more of a total stock market ETF or wide exposure, so that we're not at risk of, one earnings report or whatever. So that's the plan on that portfolio. But I was saying too, like there's a reasonable chance that there's a reasonable scenario where I sell this entire thing, and it's not like we're that far off from that, but we'll see. We will see. So that is TOT. That's the story there. Talk about gold. Oh yeah, oil. Oil was interesting to me. So check this out. So I think if I had to take a guess at what's going to happen next on oil, I suspect oil is going to make a move towards the 71 area, this volume node. This move yesterday, big upper wick, smash right back down. Now you're closing into these lows. The problem is that you got to hold over the weekend, so I'm not going to do it now. I'm not playing it. And also, it's not worth it in bigger time frames, but I suspect oil may make a push down to like the 71 area. If it gets down there, we can get it a little more interesting and see what happens if it wants to test these lows, but that's my suspicion on it. We'll see. Could be totally wrong, though. Could be totally wrong. Other than that, there was... there's an Apple chart that I was interested in, maybe for a swing trade at some point in the coming weeks, coming days, I guess, into next week. Apple kind of just setting up in this consolidation flag, if you want to, if you will. So I think a break of like 192 to 193 probably pushes you, dare we say, up towards $200 on it, which it tagged 198s in July. So I don't know how I would risk it. We'll see what happens if it gets there next week or in the weeks coming. But I'd be interested in that. Now it's also time to start looking at the weak stuff for tax loss harvesting. Like we were saying, if you are looking to hedge and you're looking to potentially play backsides of where you want to play the short side, like I don't want to play longs, well then I would be looking to where things have been weak, and so looking for the weakest sectors of the entire year and then finding the stocks and whatnot in those sectors that have been weak. Yeah, here's one. Now, Walmart hasn't been weak. It's kind of just chopped along the entirety of the year. But I thought it was interesting how it had broken down. Maybe there's some news there today on that. Yeah, I can see 150s coming in Walmart at some point. But big gap down on earnings, and it's kind of just unraveling a little bit there. Yeah, but I mean, even that, it's like a risk to play the short side. Oh, yeah. But I was saying with oil, so look at some of these charts on these oil stocks. Now, this is a spot. I'm not shorting them actively right now. I only have like 3 positions that are sure. Meta, Adobe, swings on the weekly time frame, so there's really not much. And I've taken half profits on Adobe anyway. And then I have a Bitcoin swing, which I should probably move my stop loss up, to be honest with you, on that. But either way, this is like if I was looking for the short side, and I have alerts set, it's ExxonMobil under 102 gets a little more interesting, because you are talking about like the bottom of its range for the past like year plus on Exxon. And if you zoom these charts out, check out the volume profiles. I mean, the volume profile is really interesting. Like we are under $100, even under 101. I mean, there's not a lot of volume until like the lower 90s. So if oil, like that's why I was watching oil. If oil does unravel a bit, like I'd be watching some of these charts. Exxon is one, and then CVX is another one that I have an alert set for in case they do break down. Now CVX has done decent today. Well, I guess they're both up today, but look at CVX's chart. Kind of a better looking bear flag, if you ask me, right? You have this big move down. You broke under this support right here, which was support for the entirety or the majority of this year. You broke underneath that. You're now consolidating right here, and you've been doing so for a few weeks. And if you break that consolidation, you've got less volume on the volume profile underneath here, all the way down to like 120 or 118, which is kind of crazy to think about. So, I mean, these are some charts of interest. Now, the reality is that oil would probably have to get crushed for you to see moves like that. But something to keep in the back of your head is if there's a, like, that's just where my head was going to. If there was a spot for downside plays, it would be probably that sector if oil stays weak. Probably, but it could all change. OPEC meeting was a flop. Yeah, the OPEC meeting, it spiked and then it dropped right back off, which is kind of funny to see how that goes. That's why, holding through those things are very tough, because you have to deal with the wicks, the upper wicks, or the crazy price action. But on the backside of those meetings, like it's great because, or the backside of those releases, it's great because you get clarity of price, and you generally will get some of those fake, not generally, you many times you'll get those fake outs where you get a big move down and then it reverses completely and it just fakes people out, and then it goes the other way and it's like, oh, now it's time to play the other side. And then in the case of a breakout or breakdown zone, right, it's more interesting. But yeah, I mean, I was looking around, like there's not, I think you're going to have in a week or two into the second half of December, which I believe I saw a stat as well. Let me see if I can pull it up. From Ryan Detrick, who is pretty bullish, I'd say, in general, bullish bias, which is good to just know, because that's a spot to be thinking, right? Okay, where is their head at? Let's see. I saw this stat here. Yeah, here it is. Or this chart, I should say. So December usually doesn't do much until the end of the month. So technically, December is a pretty strong month seasonally, on average. However, this is the last 72 years. So we don't really see much go down the first couple of days. Now today the market's up, but the S&P is not up that much. So it's like, okay, nothing crazy. You see a nice push, like early in the second week of December. Then it pulls back a bit, which then sets you up for that big push from the 15th on. And this is, of course, just taking massive seasonal and historic averages. So it's like, it's not like you can take this and go, oh my God, it has to, like, we're going to respect this perfectly. No, these are just the averages. But generally speaking, like, second half of the month. So that's why I was like pairing this up with some of these charts. And I'm like, well, you could have, a lot of these large caps, the Mag 7, right? Like a lot of them could be in consolidation mode and could be setting up and gearing up for, early first half of the month. And then if they start to push up on their highs and break out of those highs, you can get a nice push second half of the month. So that's kind of the thought process on some of those. Small caps and, growth stuff, different story. They're kind of just going for it now. But that's what I was thinking maybe is a possibility if the market wants to keep going. And then we get to that question of what the hell we do into next year. I will cross the bridge when we get there. Cross that bridge when we get there. The more, I was also looking at sentiment. So check out AAII sentiment. Then I want to pull up Fear and Greed Index. So AAII came in this Thursday at 48.8% bullish, which is freaking bullish. Not the highest. We saw higher in July, believe it or not. And 19% bearish. Now that's pretty low bearish sentiment. I want to say, if I jump over to this, I want to say 19. We haven't seen a 19 on the bearish side in a long time. You'd have to go back pretty far. You'd have to go back past July, prior to July, which is pretty interesting. 48, we saw 51 in July. So the thing that we're getting to, though, is like we're getting up there into this point of like, okay, people are pretty bullish again. We're getting pretty overextended. Fear and greed is not totally there, which shows you that we've got still a little more catching up to do across. Well, honestly, we're getting there. We're getting there. We're certainly getting there. So we'll see what happens on this. I think you got fear, like you got junk bond demand holding you back, safe haven demand holding you back a little bit as to why as to why we are not into extreme greed just yet, because you're seeing extreme greed on momentum, you're seeing extreme greed on put call ratios, greed across breadth and strength. You're just not seeing it across the other aspects of it. So it's kind of throwing off the indicator, if you will. Like we're up there. We're certainly up there. Let's give it 100 IWM. Nice. Start wheeling. No, that's going to be good. And how often are you looking to do, like weekly, you think? You could technically do daily, I guess, on it, right? They have dailies. I would probably do weeklies because, yeah, that's probably what I would do. It's easier to come in on Monday, or not, you don't even have to sell a covered call on Monday. Like what I would do on it is what I've been doing more so is if we've been having a good rally, oh yeah, I'll sell every week because we're pushing. But if we're dumping on like IWM and stuff, I'm not really super inclined to be just trying to sell aggressive covered calls, because yeah, of course we could keep going down and then those are going to expire worthless. But the risk of a snapback, like look at some of these moves, right? The risk of a snapback and getting taken out is just not worth it to me. So I'm much more like in the camp of I'm going to get more aggressive in selling the covered calls as we are pushing. And then when we're dumping, yeah, your portfolio is taking a hit and it sucks, but you're really maximizing the good times. And then I guess you could use excess margin if you wanted to, or if you had the margin to then sell puts into the push down. Ideally, in the perfect world, you grow a portfolio to large proportions, and then you've got you're not using margin, but you utilize margin to sell puts when the market's selling off. And then ideally you sell way out the money puts, chances of getting filled are quite low, just to cash flow a few bucks, and then never actually utilize margin, but just have that as a back pocket, a buying power. That's kind of how I would go about it. That's in the perfect world how I would like to go about it. Or if not, then you can just hedge if you want to. But that's probably the way to do it. This way you're cash flowing on both ends. You're cash flowing from the small dividend that you're getting paid on IWM, or it could be SPY or Qs, and then which they pay like 1.5%, roughly, something like that. You're cash flowing on that front, quarterly, which is nothing crazy, but it's extra cash. And then you're cash flowing covered calls, and then you're cash flowing on the put side. So you're cash flowing in both scenarios, where the market's rallying, the market's dropping, and you're getting the best premium because When the market's dropping, you're not going to get good premiums on the call side, and there's more risk there because if you ultimately never want to actually sell your position, your intention is to just sell options that are out of the money and that never actually expire in the money, then your game plan is cash flow. Eventually, you're going to get taken out at some point. It's going to happen. But if you can have that happen very, very minimally, that's probably the game plan, or that's probably a good place to be long term, I would suspect, when the numbers work themselves out. Weekly's probably yes. Selling low delta into strength. Probably this SPYI strat for IWM and buy a little protection in case it keeps going. That's not a bad idea. It's not a bad idea. The only problem with it is that, well, I don't say problem, but the only problem I'd say is that, it can move 2.5. Well, Jesus, man. Look at this thing. Holy shit. Look at this thing go. It just doesn't stop. Volume is coming in massively. Just hit a new high of the day. Like, it's up nearly 3% today. Like, that's the problem, is that you can have a 3% day out of not really out of nowhere, but it can come out of. Let's look. So let's see. If you go to IWM and let's say you were going to look and see if you can sell one for next Friday. That's because you were just getting all excited. You're like, oh, it's a massive day. And that's kind of what I would do. This is a massive update. So I would be looking at next Friday, which is the 8th, I believe, right? So how big of a move we have this week? You had, well, let's go to the weekly time frame here. Just take a peek at some of these weeklies. I'm sure there's more. You can do more of a calculated, analysis here. But this week you had about a move, 177, 185. So you had about, what is that, $8 move? $8 move there. This week you had a move, 168 to highs of the week. So a little over $10. Well, about $10. Now it's 2 weeks ago. So $8 to $10 move. So if you go $10 out of the money right now, which means you got to go to 195 to be safe, you're getting paid 11 cents. It's not bad. I mean, it sounds like kind of stupid shit, but like 11, 12 cents, it's not bad. If you do that every single week, do the math. That's $10+ a week. If you just do the simple math of like, let's round it down to 10. It's $10 a week times, just call it 58 weeks in a year, because just to be conservative, it's $500 a year you're cash flowing, right? On a position size, on 100 shares, which is how many? That's 18 grand. It's just about 3%, not even under 3%, little under 3%. It's not bad though, 3% there, and then you get the dividend 1.5, so 4.5% cash flow per year. Being very conservative, and the chances of those expiring in the money, man, are pretty low. $10 out the money every week. It's just a rough guess. And if you were to go $9 out the money, okay, that's $15. You get paid $15, which changes the game. It massively changes the game, because if you get paid $15 per week on average, which that's a lot, and that's probably not going to happen. But if you get paid $15 a week on average, times a rounded 50 weeks, yeah, it's different ball game. You're making a lot more relative. About a little over 4%. Yeah, so you're pulling like cash flow of over 5% per year, plus appreciation, and not having to pay somebody else for the appreciation. Not too shibbity shabbity. And then you can pair up that with even resistance levels. Like you can get a little bit more dialed in with it, but of course that adds more risk to it. So, but I like the idea. And again, that's not that, like, you think to that, like, it's a shitty amount of money. Like, it's a small number. Yeah, but again, cash flow, compound, keep running the wheel. It'll add up. Deposit more money, invest dollar cost average over time. It'll add up. You get yourself 200 shares of IWM. You get yourselves 200 shares of SPY, 300 shares. And, and you start cash flowing it more and more and more. That's the way to run it. But yeah, that 10-year is down 2.5% on the day, which is definitely fueling the Russell making a big move. Certainly. I actually, believe it or not, I have, which the recap will come out after this video, I actually had a short today on Microsoft. Believe it or not, here's the Microsoft chart. Didn't look great on like the 1 hour time frame off of the highs of 2 days ago. So I'm like, okay, you're starting to see, you can start to, discern a little bit of a DT, a little downtrend, right? Lower lows, lower highs. Okay. Big move down off the open. Okay. I actually played, if you go to I was on a 5-minute time frame. I played the breakdown under 376 right here. Little false. I got faked out for a second because there was news. There was some manufacturing bullshit data, which not bullshit. Just data came out as I was in, stopped me out briefly. Then it reversed right back down. I re-entered it and poof, nice move. Nice move. Too, like if that's the thing, and think about this, right? Let's say that IWM, I don't know, let's just say that the next 6 months are amazing because the next 6 months prices in rate cuts. I don't know. But let's just say that that's with the way the market looks, now. Because, for so long the market was looking the other way. Now it's like, okay, if that's what happens and IWM has a run, like, and it goes to 200 plus, I mean, you'll be looking really good if it went 200 plus into next year. Now, of course, it's probably going to have ups and downs along the way, but if it went to like 210 into next year, that's, 14, 15% appreciation in the actual underlying shares, which is nice. And then plus the cash flow, which you'd be pulling like close to 20% returns net after all, right? Which is pretty good if we got up there, of course, big if. Honestly, I'd be looking at something like this, to be honest with you. I'd be looking up towards 220. It's just such a glaring area for like the big picture. If we push up and if this trend continues to the upside, build some higher lows over time, like that would be the spot. 220 is the area I'd be looking at for IWM. Gets to 220, and then I'd be like, okay, it's fine. It's finally come back to reality. It depends on what the S&P does. The S&P is at 500, then maybe a different story. But we'll see. Let's check out SPY. So SPY hit a new high of the year, I believe, today, briefly. And it pulled back just off that. But it's essentially right up against the July highs. So, yeah, look back to the left, though, and you're talking, back in July, we're talking like, hey, we're not that far off from all-time highs. This is a key spot, though. If you zoom back to the left, I mean, you've got, not only was it July highs, you had double top around early February of 2022, and then March 2022 rally as well. That's a long ways back, but it's still notable. Like, that's a key level to watch. So above this level, I mean, all-time highs. That's not that far away. It's not that far away. It's just that's the next kind of logical area I'm thinking. Imagine we hit an all-time high before end of year. It'd be absolutely insane to think about. And it's insane to think about from like the perspective of like how bearish people were just, a couple months ago, literally like earlier this year, even just back in October, how bearish people were getting, back then as the S&P was coming down under 410 on SPY. I was like, oh shit, we're going back to 390, 380s. I was seeing a lot of people talking 380s, 390s, easily, new lows. Like that's and in a month and a half, not even a month and a half, literally a month, that has completely flipped. And now you're talking like we're not that far from all-time highs. Not even like the move that was made in a month, from literally like the late October to now, has been 12%. If the S&P rallied 12 more percent, like that, where does that put you? It's got to be like 500 probably. Let's see. More. Holy shit. 12% from here puts you at 514. Jesus. That's insane. Like that happened in a month. Now, part of that's, snap back from pretty aggressive move down. So you quickly snap back, and now it's kind of slowed down. Now that it's caught back up, it's slowed down. So the reality of it being an aggressive move, if you can pinpoint a bottom, like, yeah, you're going to catch big moves. You're going to be able to pinpoint big moves because you're going to get the balance. And there's like, but still, that's kind of crazy to think that we're, like if we pulled something like that would be the scenario, like I was saying before. If that occurred in the next month, that is the scenario, in my eyes, in my opinion, where I would sell my entire portfolio. It just, the risk reward doesn't make any sense. It doesn't, with 5%, getting 5% on your cash from Robinhood right now, it's like, well, okay, I'll take that and not have any risk, and then just trade the charts that I see in my other accounts and not really think about it. And I'll probably just take that money and put it elsewhere to use. That's what I'm going to do if that happens. We'll see, but that's the plan. Wouldn't mess with large caps of SPY 500 end of year. Yeah. It's just going to be super. It's and again, the thing is, like, we say that because, you know, we're looking at these things and they could go higher. Like, it could go higher and it would make people lose their mind, right? But then that's just the reality of I think if that type of situation were to happen, and you kind of got a little glimpse of that because you had like GameStop and you had a lot of those meme stocks kind of going decently this week a little bit, and a little bit of a kind of resurgence of what we had, you know, seen, you know, in years past and some good rallies. It would be crazy to me to think that we're going to get another shot at this whole thing after recently having it. Like, imagine if we actually did rally that hard, got everyone bullish again. We started seeing penny stocks and meme stocks going crazy. We get crypto going hot again. Like, and we just get people are coming back to the game and they're like, oh, hit the casino. And they're like, oh, here we go. If that happened, again, that's a great sign, I think, to get out. But it would be very surprising to me for that to happen, like, you know, a couple of years ago, not even, and then now happen again, and it be the exact same scenario. There's no way. There's going to be some fuckery in there. I almost can guarantee that. And whether that fuckery is false breaks and large pullbacks, or whether that's a even larger short squeeze than we can imagine, move up on the S&P and make people go, holy shit, what's going on? To where, like, you get out of your entire portfolio, for example, because you're like, no, I don't believe it. And then the S&P goes another 20% from there. Like, something nutty like that would be like the fuckery that I would suspect, because of how there's no way it's going to be the exact same replica of what occurred a couple years ago. There's no way. So we'll see, but and expect that. I think that going into expecting that will be a good way to view it, because if we start seeing a lot of those similar signs, same things, you know, doesn't mean that, like, oh, this is gonna all unravel tomorrow. No, it may, but it may not. Sentiment also switched bullish. Yeah, no, that sentiment is big. Now, the thing is, I'm interested in is because last big rally, if you were to go back to SPY, last big rally on SPY, that it took a couple of weeks. Like, it did take a couple of weeks to see that. So if we go back to the sentiment, right? If we jump back to the historical data, if you look into, well, fuck, I got to pull up the whole thing. Yeah, I think I might. Well, okay. Yeah, I got to pull it up because it needs to be pulled up. Give it a second to load up here. But I'm pretty sure we popped over 40% bullish in like June, and then we're 40+% bullish into July for like a month, over a month, and then the top came in. So it's not like, again, just like the bearish side, it's not a perfect indicator, but it could be useful. What do we have? What the hell? Oh, here it is. So, okay, I'm going to highlight it so it's a little bit easier to see. I'll see if I can zoom in. Why am I being an idiot? There she is. Yes. I know this is like super, super small text. So hear me. Okay. Let's see. So let's go back to June. Let's go back to that summer period. So here's bullish sentiment on the left-hand side. I'm going to highlight it. So we got over 40% June 8th, and then we stayed 40+% all the way until August 10th. So this is the time span. So that was a long time. So you had almost 2 months, pretty much about 2 months, where bullish sentiment stayed above 40%. Now, if you jump back to SPY's chart, so June 8th, let's mark where June 8th was. So we had this big move, right? It pops up into June 15th. This is June 15th. So June 8th is like right here on this little breakout right here. So see what happened though? The S&P kept going until honestly, like you can pretty much say end of July. Let's call it August 1st. The high was made in the 27, but it stayed up there the next couple of days. So it was really to here. So you had about almost 2 months from that span. So if you go to this current sentiment surveys, let's see, we have recently got above 40%. Wait, sorry. We got above 40% November 8th. So if you do the same math, you're talking by January, like literally, look at how that works out. You're talking about like January 1st. So pretty much like Santa Rally would be the end. Like Santa Rally would be the end if that same exact thing pans out. Now, of course, it's probably not going to pan out the same way, but just to kind of see how long of a runway this may have where people can kind of get really, really one-sided for a while, hold there, sucker more people in, and then eventually get the backside and get kind of screwed, or at least, give us some sort of pullback, right? So that's kind of so looking at that, and the S&P, by the way, from that June 8th point rallied 7%. Now we made a big move in that, but from when we hit that first was November 8th, roughly. So November 8th was right here. We've already made 5%, so 7% is only a little bit more from here. But yeah, I mean, if you're looking at the math, like it's not, and then the seasonal strength, it's not unrealistic to think that all-time highs could be in the cards before year end, like into like that last week of December. Like we could be looking at that if that's what's happening. So it's not as crazy when you look at some of the numbers a little bit. Not as crazy as you think. Dumb TOT dubs. Yeah, I had a lot of I had sold puts on TMF, so I was sitting with like a kind of too much TMF. But now I'm gonna get a little more aggressive in the covered call front. But after the split, they have a split coming up, 1 for 10. So we'll see how this all works out. I don't even know. I'm curious how the covered call situation works. They should probably expire worthless anyway. If actually some of them are expiring today. Whatever. We'll see. We'll see what I got. But I'm going to start trimming that out as we push, if it pushes higher, especially if it gets back up into the 6 and 7 range, And then I just have my core of TOTW plus a little bit of this, and then that's plenty of exposure. Or I could just kind of switch it all out for TOT, which I may do, but for now it's fine. I was selling covered calls, so it doesn't really matter. All right, so market close. What do we got on some of these final numbers? 66% greed. FinViz. What does FinViz give us here? Okay, this is good too. So 78% advance or day, 85% new high versus 14% new low. Okay, 75.2% of stocks above their 50 moving average. That's pretty substantial. 24. There were some stats on this. I'm sure you can pull it up. I forgot. I had them a while back, but I'm sure there's some stats on this number, and this is probably not it's not a bad sign, but you're buying into the strength if you're buying now. 25% of stocks below, 57 above the 200 moving average. If we can get both of these above 75%, that would be like pretty overextended territory, likely. So a lot of stuff is close. I'm looking at the math, and it's like it's getting there to where it's like, okay, time to potentially throw the hedge on. However, I'm almost more so thinking now, instead of the hedge, of just kind of getting out of the shit, like most of everything. You know what I mean? Instead of hedging. So we'll see where we end up, and I'll give it to the end of the month, and we'll see where we're at that point. But yeah, that's the deal. So yeah, it's an interesting week for sure. I have trade recap coming up in about, I think I scheduled to go live at 3:30 my time, so 4:30 Eastern time. So in like 25 minutes. There was a short in there, and I wasn't super excited to take the short, but it worked, and it was a great setup, so I took it. And then charts telling me to stay long, though. Charts telling me to be only looking on the long side for a short-term trade, so we'll see. But not a lot of stuff that I have been trading that has been setting up really, really nice. So it's been few and far between on the setup side. However, there's been some. There's been some. But we're looking at, I think the gold setup does look pretty appealing. Big picture. Not right now, I don't think. But like big picture, gold testing new highs. I wouldn't be surprised that goes on a run. We're looking at oil. This doesn't look good. Oil could be looking at low 70s here soon. So With that said, we'll wrap it up. Massive weekend of football coming up, so hopefully that's a good time. Weather's finally gotten good here, so make sure to get outside and touch some grass and have a great time. So hope everyone has a great weekend. Get outside, do something fun, and I'll see you next week for at least 3 streams. Monday, Wednesday, Friday for Power Hour at a minimum. I may jump on in the morning if I have time for some live trading streams, but we'll see. To be determined.